Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life, no matter if the markets go up or down. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, Monday, February 3rd, 2014 is the date. Markets are taking a beating, although we are bouncing off of key support here on the intraday chart. Now, again, what you're looking at is the SPY chart, which mirrors the S&P 500. It's the tracking ETF. So, again, this is basically the S&P 500 on a 10-minute time frame, meaning every candle is 10 minutes long. And that's one of the ways day traders trade, through smaller candles, because it lets you see exact levels that you should be buying or shorting and basically gets you in and out very quickly, which is what we've done all day. Volatility today is phenomenal, and day trading is just fantastic. So, again, lots of profits here at InTheMoneyStocks.com today in the intraday stock chat, which is for day traders, and even in the research center over the last couple of weeks has been a tremendous profiting streak going back to 2013. 2013, 500% net profits plus. And again, even if you only put 10% of your money in each play, that's still over 50% gain for the year on your portfolio. Think about that, folks. 50% gain on a large portfolio. That's if you only put 10% of your money in each account. If you did 20, 30, whatever, it's exponentially bigger than that. All right, couple little odds and ends here. Number one, markets are getting hammered. Last week I talked about a key level. It was the 1770 by 1775 level on the S&P 500, or this level right here on the SPY, which is the same thing. All right, this level on the SPY, 177 to 177.50. Notice how you hit it last Monday, bounced, hit it on Wednesday multiple times, bounced, hit it on Friday, and bounced, and then today it's getting wiped out. I said if you take that out, that is a major, major break point on this market. All right, now if somehow they can rally it back above that level by the end of the day, which I doubt they can, but there's always a small chance if the Fed says something, then maybe this market gets saved. But right now, you have to think that there could be some major issues in this market right now going to the downside. Now, it doesn't, I want to make this clear. All right, overall, in the scheme of the next couple weeks, a close below this level right here, that's very, very bearish. Doesn't mean we won't have a 1 or 2 day bounce here and there. I want to make that clear. You can definitely go sideways with a small 50 point bounce in the Dow here and there. With the Dow down, 250 today, that's nothing. But the key is, as long as you stay below, I repeat, below this level here, the 177, and don't reclaim that, then the overall general bias over the next multiple weeks should be negative. All right, make sure you understand that. All right, again, because some people sometimes we'll see a little bounce tomorrow and they say, oh, but the market's going up and Gareth said it's going down. No, no, no. That's an interim bounce inside a bigger bearish move, which is fine as long as you don't recapture that 177, 177.50 level on the SPY. Okay, so hopefully everyone understands that. I don't think it takes a genius to get that point across, so you guys should all understand it. And just a couple little other odds and ends here. Markets again bouncing off this little pivot. Why is that an interesting pivot? Well, if you zoom out a long, long way and you go back to October, and this is what I think is amazing, folks. We're down to October lows now, but you can see right here. See this little pivot going back to mid to late October right here? That's what you got into, and that's where you're bouncing. So I actually think that's a decent level on the markets. I think we have put in the lows for the day, but again, doesn't mean we put in the lows for the next few days, and I think that's important to recognize. There are some other stocks hitting key supports as well, and some other stocks are actually performing pretty well, which I do want to give you guys. Number one, a couple stocks performing very poorly. Amazon. Amazon got hammered on Friday last week because of earnings given out on Thursday evening. That stock is continuing to take a beating, but it is into good support here. If we go to the daily chart on Amazon, see this low pivot right here? All right, so you had this gap up and then reversal there. That low pivot, take a trend line and just draw it straight across and look at what you get. All right, see how amazing these charts are. If you didn't believe in charts, then you should now, after I just show you a simple trend line like that. And some people are like, oh, I don't understand. Well, just draw a trend line in there from that low. There it is. Drop in the market, Amazon goes right there. Now, am I stepping up to buy Amazon here as a swing trade? No. As a scalp trade, yes. I gave this as a level to my intraday stock chat members, and that's a great level. As a swing trade, your buy level has to be more solid to me. All right, you need other factors, other PPT factors out there to make it worthwhile. In which case, what you're looking at is really this gap fill right here. And if I take this gap fill and stretch it across, you have a lower pivot plus the 200. So what I'm going to do is look for a 3-bar surge, right? 1 bar, today's 2 bars, a 3-bar surge, ideally getting to this level around the 331-ish, 330 level. Maybe even closer to the 200 if I'm lucky. All right, but basically anywhere between 330, we'll call it, and 320, which is only 10 points on a $300 stock, so that's not much. But I would say anywhere between those two levels is your buy range, or what I like to say is accumulation range. Accumulation, what does that mean? Well, accumulation means that you start to buy small pockets of the stock to accumulate your larger full position. So let's say I wanted, I don't know, 5,000 shares at that price or somewhere in this range in total. That's my total position. So what I would do is I'd buy 5 times 1,000. So at this line here at the gap fill, I'd buy 1,000. As it goes down every couple dollars, or in this case, since it's a $10 range, every $2.50, I would buy another 1,000, accumulating, well, even $2. It'd be every $2 to get 5,000. But I'd buy that all the way down. So ultimately, if it gets to the 200, I have 5,000 total shares with a good average price. All right, and that's really what I mean by an accumulation zone. All right, anywhere between there, and that's what I'll probably do, to be honest. I'll just start buying small amounts as it gets into that range, and I think that would be a very nice area. So keep an eye on that area in the coming days. With the way the market's acting, you could easily get there by tomorrow, especially on a 3-bar surge. Would be very, very nice. All right, one stock that's green today, Apple. Apple got hammered last week. It is starting to push up a little bit. Strong showing today, considering, but I still can't go near this as a swing trade unless it gets into that 200 MA. 200 MA is a really nice level, though. All right, I'll show you why. So see this consolidation right here before it broke out? If you just take that center point right there and just draw it across, you get that 200 MA. All right, and this is telling you have a lot of support here. All right, a lot of support. Anytime a stock goes sideways in an area, and this is important, anytime it goes sideways in an area for a period of time, what it basically is doing is it's like building a bridge or building a wall. So then if you break out and then you come back into that level, that's what you look for as support. With the 200 MA there, that's a very, very strong level for at least a swing trade for a few days to a week or two. All right, now you're not going to marry the stock. You're not going to fall in love and hold it for a year because it'll probably go lower, especially the way this market is looking. And going into 2014, I want to be clear on this, folks. I gave the warning out. I told you guys that we were seeing distribution by institutions. They were selling at the highs when we were at the highs of this market. It was so clear. I talked about how you could see it. I showed you every little nuance of this, and then the markets collapsed. So, don't act like this is a surprise. We all were prepared for this. I had a ton of shorts out there. I've made a ton of money on this market, and I'll continue to make money, frankly, as this market continues to collapse down. So just be aware. I want you guys to understand it and really be focusing in on these keys to unlimited success. That's really what it is. It's unlimited profits available to you if you just watch these videos and pay attention and join the research center at InTheMoneyStocks.com. All right, a couple other stocks in motion today. Goldman Sachs. I want to know Goldman Sachs because it is hitting its 200 here. All right, so this is actually on watch for me. I am not buying it as a swing trade. I did buy a swing trade today. So if you go to the research center and you take the 7-day free trial, you'll see what I bought and you'll get the exact entry. But this one was not the one I did because I am following it because it's the 200. But I'd rather see JPM into the 200 and then Goldman piercing the 200 a little bit lower. So let me just show you what I mean by that. Let me just erase this line. We don't need it there. All right, so if I go to JPM, right, and you can see I've did a lot of mock-ups on this JPM chart, which we can erase here. All right, JPM is beautifully breaking down as I predicted last week because you were forming bearish inside bar action. And you can see downward move, choppy sideways action with a necktie right here. Good bearish breakdown. But what I want to see is I'd be more apt to buy Goldman when JPM hits the 200. And you could even buy JPM at that point too, which is not that far away. You can see JPM's actually bouncing off the lows. But this 200 MA, which is on JPM around the 53.90 level, looks very interesting to me as well. And you will have, as soon as things subside, you're going to get big bounces in this market, folks. The key is you just have to follow the levels so you can negotiate through the craziness. So, for instance, as I said, if we got a bounce tomorrow, let's say a point and a half on the SPY, which would be 15 points on the S&P, that wouldn't be anything different. That would just be an interim bounce because you're not recapturing the major levels. Now, if you recapture the major levels, then you just look at the next level above it and say, okay, well, it's recaptured this level, then it should be able to get to the next one. And you just kind of take it step by step, and you neither want to be a bull nor a bear. You're just following the levels. So when the levels tell you the market's going down, okay, it's going down. If the levels change, you say, okay, well, it's going up. and you just go with the movement of the charts, and the charts don't lie to you. And that's the beauty of it, folks, is that if you read the charts correctly, they will always tell you where the next move is. Now, the big question is, can you learn to read the charts, which I believe everyone can. If I could learn it, trust me, I'm no genius. If I learned it, I think you all can learn it. And, this way you get away from the hype of Wall Street. And, one thing I just like to say here is the average investor listens to CNBC, Fox Business News, whatever, and that's all hype, folks. The analysts on Wall Street, hedge funds, they're all hyping the stocks that they want to go up so that they can sell it into you. They want to sell those shares at the highest price possible to the average investor. All right, and once they're out, then the stock falls and they're happy because they took their profits, and the little guy gets screwed as usual, and that's just the nature of the beast. So I want you guys to understand that. And that's why you can't listen to the media. You can't listen to analysts. When you get upgrades and downgrades, just think of Apple at the 2012 highs of 700 getting upgrades galore just at the top. I mean, just think about all those people. Some of you guys listening may have even bought it up there. And that's just a big no-no. You can never do that. Never listen to Wall Street. They're the ones trying to take your money. And it's just a transfer of wealth. I mean, markets are a transfer of wealth from intelligence and people that are in the know, and those are different than intelligence. Intelligence is people that study the charts and learn and so forth. And then there are people that know the games of Wall Street that can just easily do it as well. And then there's Wall Street, and those are the groups that take the money from those people that don't. And it's just a transfer of wealth. And what I'm trying to do, my goal here is to be out here and step up for the small investor who doesn't know this and educate them. As long as they're willing to be educated, I'm here to educate. All right? So just be aware of that, folks, and really good stuff out there in this market. Let me just go back to the SPY. Looks like we're still off the lows. I do have a couple supports on the daily chart. Number one is right here, which we're piercing. I wonder if we get back above it by the end of the day, which is the 175 level. I do think we could recapture that by the end of the day. And then your next big level is right here, folks, which is at the 173.20 level. And that will be your next major support. Intraday here, you can see again, we're coming in a little bit, but we've had a nice little bounce. The big question is if we get to this 20, which we will eventually hit today, can we get above it? And that'll be the next signal there. Okay, so these little tidbits, very important for us to recognize and follow, and they should be a way for us to profit for life. All right, and again, I put out a new long alert in the research center that triggered today, and again, if you're not a member, come join us here at InTheMoneyStocks.com and take the 7-day free trial. Take care, guys.